Ever hear the one about turning 10 bucks, like literally $10, into a small fortune through trading?
Yeah, sounds like one of those too good to be true kind of deals.
Exactly. And that's what makes today's deep dive so interesting. We've got this transcript we're dissecting. It's actually a translation, originally in Spanish, and it lays out this whole strategy for supposedly doing just that.
Oh, wow, Spanish, huh? So we're talking about some international trading secrets then.
That's the idea they're going for, making it sound super exclusive. But instead of just taking the bait, we're putting on our skeptical hats today. We'll break this whole thing down, see if their $10 to riches idea holds any water, and more importantly, what you, dear listener, can actually take away from this, even if you don't become a millionaire overnight.
Because, let's be real, if it were that easy, we'd all be sipping mojitos on a beach somewhere, right?
Exactly. So they call their method, get this, interest compounding through trading.
Okay, interest compounding, that's familiar.
Yeah.
But through trading, how does that even...
Right, it's kind of a head scratcher at first. Basically, they say you take your initial 10 bucks, make a successful trade, then reinvest all the profits and repeat.
Ah, okay, so it's like that snowball effect, right?
Yeah.
But with hopefully more green and less, well, actual snow.
Exactly. And to really sell it, they give this example. String together 4 winning trades in a row using this compounding thing, and boom, your $10 magically transforms into $1,210, on paper at least.
Wow, 4 trades, huh? That's a pretty bold claim. And 1,210 bucks from just a tenner? Sounds a bit optimistic, to say the least.
Yeah, and that's where the fine print, or lack thereof, comes in, because for anyone who's even dipped their toes into trading, 4 wins in a row, that's no walk in the park.
Not at all. It's like, what are the chances of winning the lottery and then winning it again 3 more times?
Right. So what makes them think they've cracked the code here? What's the secret sauce?
Well, according to this transcript, the key is all about finding this so-called perfect zone to make your trades.
Perfect zone. Sounds awfully convenient, like they've got some insider map to guaranteed trading treasure.
Yeah, it does sound a little too good to be true, right?
So how do they propose finding this perfect zone? Do they have a crystal ball or something?
It's all about reading the signs, or at least that's what they want us to believe. They start throwing around these terms like rejection candles, parity candles, even something called an accumulation zone.
Okay, hold on, hold on. Now you're just messing with me, right? Rejection candles? What is this, a seance?
And the hits keep coming. There's more. They also mention something called a Kurg pattern, but they kind of gloss over it, imply it's explained in their other videos. I guess they got to keep some secrets for the paid subscribers, right?
Classic. But seriously, what do those even mean?
Well, basically, all those fancy terms they're using, they're talking about visual patterns and indicators that some traders use to, try and predict future price movements. It's all part of this whole world of technical analysis.
Ah, so we're getting into the realm of charts, graphs, and those squiggly lines that always make my head spin.
Exactly. Now, in fairness to them, technical analysis, it's a pretty popular approach among traders. It has been for ages. It's got its own set of rules, strategies, the whole shebang.
Yeah.
But
But isn't it notoriously difficult to predict the market with any kind of consistent accuracy, even with all the fancy charting in the world?
you said it. It's like trying to predict the weather. You can look at all the data, all the forecasts, but sometimes Mother Nature just does her own thing.
Exactly. So this whole perfect zone thing where you're guaranteed 4 winning trades in a row, it all feels a bit, I don't know, like they're overselling it, don't you think?
Let's just say I wouldn't bet my bottom dollar on it.
Yeah.
Here's the thing. This strategy, it hinges on this idea that you can perfectly time the market, and not just once, but 4 times consecutively. And that's where, in my opinion, the theory crashes headfirst into reality.
Because even if you manage to snag a win or two, one wrong move, and boom, those gains could be gone. Especially if you're going all in with each trade, like they're suggesting.
Exactly. And that's the other thing. This transcript, it kind of glosses over this whole risk management thing, which is a big no-no in the trading world.
Yeah, because they make it sound as easy as ordering takeout.
Right. Like, just find the perfect zone and watch the money roll in. But imagine you've been working hard, saving up, and then, based on this one strategy, you throw it all into one trade. It's a recipe for disaster.
Talk about a stressful dinner order. You're making my palms sweat just thinking about it. And this is what I find so interesting about trading, the psychology of it all.
Oh, absolutely.
Because the transcript makes it sound so simple, almost mechanical, But we're humans, not robots. We have emotions. We second guess ourselves, especially when it comes to our hard-earned cash.
Exactly. Trading isn't just about charts and patterns. A huge part of it is mastering your emotions, which, let me tell you, is way easier said than done.
Oh, I bet. So how does this emotional roller coaster play into the whole compounding thing?
Well, think about it. Each trade you make, it carries the weight of all the previous ones, so the potential for profit grows, but so does the fear of losing it all.
It's like climbing a mountain, right?
Yeah.
The higher you go, the more breathtaking the view, but also the further you could fall.
And the transcript doesn't even touch on some of the other psychological pitfalls like chasing losses. It's this thing where traders try to win back what they've lost by making these like impulsive decisions, often leading to even bigger losses.
It's like doubling down again and again at the roulette table, hoping that this time you'll beat the odds.
Exactly. And let's not forget about overconfidence, another silent killer in the trading game.
Overconfidence. How so?
Yeah, let's say you get a few wins under your belt. You're feeling good, invincible even. But that confidence can easily morph into like blind optimism, and that's when people start making reckless decisions. They get blinded by those dollar signs and forget about all the risks.
So it sounds like while this whole $10 to riches story is a great attention grabber, the reality, as with most things, is a bit more nuanced.
To put it mildly. Now, don't get me wrong. I'm not saying that this whole strategy is complete bunk. There are some nuggets of wisdom sprinkled in there, even if they're buried under a pile of, let's call it marketing magic.
Okay, so let's do some excavating then. Marketing magic aside, what can we actually learn from this, even if we don't buy into the whole fairy tale ending? What are the real practical takeaways?
Well, one thing they emphasize, and they're not wrong about this, is the importance of having a clear strategy. Like, yeah, they might be oversimplifying it a tad, but you absolutely need a plan. You can't just jump into the market blindly, throwing money at every stock that catches your eye.
So it's not just about finding this magical perfect zone, but rather having a system, a process that helps you navigate the inevitable ups and downs of the market.
Exactly. And you know what? Even this whole perfect zone concept, while flawed, it does touch upon something important in trading, understanding market conditions.
Okay, so less about magic, more about being strategic.
Exactly. Because successful traders, they don't just throw darts at a board hoping for the best. They study charts, analyze trends, and look for those moments, those opportunities, where the odds might be slightly more in their favor.
So it's like playing a game of strategy. You're looking for any edge you can get.
Exactly. They understand that while predicting the future is impossible, well, unless you have a time machine stashed away somewhere, identifying those moments of potential opportunity is key.
And that takes time, practice, and probably a lot of patience too.
Can say that again.
So it sounds like we're shifting gears here, moving away from this idea of guaranteed wins and stepping into the world of calculated risks and informed decision making.
Exactly. And that brings us to another concept that, while presented somewhat simplistically in the transcript, holds real value: the power of compounding.
Okay, compounding. Now we're getting into the nitty gritty, the math stuff, right? And I'll be honest, my brain kind of checks out a bit when people start talking about exponential growth and percentages.
I hear you. It's not the sexiest topic, but it's like they say. Compounding, it's kind of like watching paint dry. Not exactly a thrill ride, but the results over time, they can be pretty amazing.
So more like a slow burn than a fireworks show.
Exactly. And this source, even with all its, let's call it creative marketing, they do touch on a fundamental truth about building wealth. It's a marathon, not a sprint. Doesn't matter if you're starting with $10 or 10,000.
Slow and steady wins the race, right? Like that old tortoise and hare story.
Exactly.
Huh?
This strategy we've been unpacking, it's fixated on those 4 quick and honestly improbable consecutive wins. But the real magic of compounding, it unfolds over the long game. Think of it this way. You've been diligently putting a little money aside each month, right?
Yep, trying to.
Even if it's not a huge amount.
Yeah.
By reinvesting your earnings, letting those gains generate their own gains, that's where the snowball effect comes in.
Okay, that makes sense. So it's less about chasing those get-rich-quick schemes and more about having a solid strategy, making smart choices, and letting those gains compound over time.
Now you're getting it. And that's something this source, for all its flaws, does highlight, even if unintentionally. Whether it's trading, investing, or really any area of life, consistency and patience, they're your secret weapons.
This has been eye-opening. We went from a flashy turn $10 into a fortune pitch to a much deeper conversation about strategy, risk, the psychology of trading, and of course, the power of compound growth.
It's amazing what we can uncover when we start peeling back those layers, right?
Absolutely. Now, before we wrap things up, we always like to leave our listeners with a little something to ponder, a final thought to keep those brainwaves buzzing. And this one's inspired by our deep dive today. We've been talking about this whole interest compounding thing in terms of trading and investing, but where else in your life could you apply this principle?
Ooh, I like that. Kind of to think about that one.
Right. Could it be about building your skills, nurturing relationships, maybe even pursuing a creative passion? The possibilities are endless when we start thinking about the power of those small, consistent actions we take day after day. We think.
I love that.
Always leave them wanting more.
Exactly.
That's a wrap on this deep dive, everyone. Until next time, keep those minds curious, and we'll catch you back here soon for another fascinating exploration.